Good morning, traders. My name is Frank Cholly. I'm a senior market strategist with RJO Futures in Chicago. And today, Friday, May 30th, I'm here with a weekly update on the metals markets. Now, in the outside markets, it's kind of quiet today. It's the last day of the week, last day of the month. Relatively quiet, though. The dollar's down slightly, 11, 12 ticks, right around 80.42 or so. The equities, a little easier, slightly lower, that means. Crude, 75, 80 cents lower. And the treasuries are down 6 to 10 ticks, 6 in the 10s, 10 ticks lower in the 30 years. And the gold market's down just a couple ticks here. And, you know, we've been talking about this sideways market. Nothing trades sideways forever. Gold had a major breakout to the downside this week, about $50 from, you know, very close to that $1,300 level, all the way down to $1,250. $1,250 is a level that I talked about a few weeks ago, saying, you know, I thought this was a little bit on the extreme side, but the path of least resistance was lower. What we saw in the gold market this week, at least in my opinion, was a major reallocation of funds. We saw the treasuries had a big rally. That's a safe haven trade there. You know, we talk about gold being a safe haven, but it doesn't always work out that way. They feel safer with the treasuries right now. You can look at the chart and you can see the treasuries spiked higher when gold broke lower. And I think that we saw a lot of money shift to move that market $40, $50 in a matter of a day. So at this 1250 level, I think there is some pretty good support. We may go a little lower, test 1240, perhaps even, you know, 1230, 1225. That is, again, the path of least resistance right now. But the market should take a breather here. We had a big spike down. We're going to do a little consolidation here. The market needs to figure out if this level is going to hold. Do the buyers come back into the market at this level and do a little bargain hunting, or do we have another leg down coming? So again, you need to keep an eye on those outside markets. If the treasuries continue to move higher, if the dollar continues to move higher, the equities continue to move higher, there might not be a reason for them to step up and buy gold just yet. But again, let's keep an eye on those outside markets. In the silver, we're back to that pivotal $19 level. It's down about 18 cents today, right around $19. So if this market can't hold at these levels, then again, you know, we could have a little bit lower to go here, but I think it is limited at this point. Copper's still looking real solid on the charts. That market's trading right around 315.5 or so. The short-term trend there still remains up. So this market, again, is really the best performer of these three big metals that I like to follow. As long as copper can hold above 310, I'm fairly confident that we're going to have another test at that 320 area. So let's keep an eye on the chart for the copper to test somewhere between 318, 320. If we get a pop above that, you know, the bulls will really jump on it then. So support and resistance in the gold. Right now, this 1250 level seems to be good support. That should hold, maybe 1240 underneath that. And then all the way down to 12.25 is the next level of support. This is August gold. On the upside, the bulls need to see a pop above 1270, 1275 to start to feel encouraged, you know, that this was just a good buying opportunity and nothing more. Above that, 1285, 1290. In the silver, this level $19 should hold, but below that, 1895, 1890 area, the support gets a little better. On the upside, resistance comes in around 1920 to 1925. Then above that, right around 1930. In the copper, again, I like it as long as it can hold above 310 level. 312 is the first support. 310 below that. If it closes or gets a good push below 310, I don't like it so much anymore. If we could get a pop above 317, test 320, then I think we could see some momentum, take that market a little bit higher. That's all I have time for now, but you should feel free to give me a call or shoot me an email. And don't forget to look for me on Fridays. I'll be here every Friday as much as possible. And in the meantime, don't forget, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.